Catch us up. U.S.-China trade talks. Where are we? Where are we headed?
Yeah, so this afternoon, we wrapped up 2 days of trade talks in Stockholm that Trump himself acknowledged this afternoon were up and down. He said Monday didn't go very well. He said today was better. And it ends without the one piece of news I think that markets were really looking for, which is this 90-day pause on tariffs. Treasury Secretary Scott Bessent and Trade Representative Jameson Greer led the talks. They're set to head back to Washington tonight, where they're going to brief President Trump in the Oval Office tomorrow on this. Trump himself was asked about whether he was going to agree to a pause. He said he would decide tomorrow after the briefing. But this is the kind of overall part the markets were watching, and it comes as you hear some sort of happy talk of constructive conversations on a range of topics, from rare earth minerals to semiconductors to broader economic themes, which have been absent in the first two meetings, but without, again, this one element that markets are really looking for, which is a 90-day pause. As one, I think, apt analysis put it this quickly after the talks, this was the bare minimum they could do, presuming that Trump eventually approves this talk. At the very least, from a market's perspective, the two sides aren't backsliding, but there's clearly a lot of talks to go. Treasury Secretary Bessent said another talk should come in about 90 days or so. But for now, it puts a renewed focus on this August 12th deadline, which is where tariffs will snap back unless Trump extends it in the days ahead.
Given your expertise in the China economy, when this all began, there was a lot of talk about their bargaining position. Yeah. Where do you think they stand now?
Well, they feel very confident, which I think is the most important takeaway. If you look at the economic data that came out through Q2 in China Beige Book, the economy is largely swimming in place, which in any other year I think would be concerning. But this year, when you've been hit with unprecedented levels of tariffs, there's a global tariff war happening, and you're still able to actually swim in place, that's pretty good. Plus, they've got a lot of negotiating leverage, as they've displayed through the rare earths export controls. So I think Xi Jinping, the Communist Party, they're feeling very, very good about this entire thing.
Well, and it doesn't seem like there was any pressure time-wise, because they've already sort of managed expectations that this is going to be pushed back by another 90 days, right?
Well, I think it seems like increasingly we're willing to just offer up 90 days, and I think the Chinese would like the truce to continue potentially indefinitely.
Yeah, I mean, Stephanie, we were talking a little bit earlier about some of the sectors that have been affected. And obviously, the companies that are still reliant on China imports are especially, sensitive to this. I talked to a toy company yesterday, and they talked about that this is really a pain point for them. And by the way, one that they think will last at least into 2026 as they try to make adjustments. So from an economic perspective, what are the implications?
Well, the challenge is, because we don't really know where trade levels or tariff levels are going to settle, it's hard to really move production. So at this point, you're going to kind of wait and see, pay the tariffs, and then kind of see how this all plays out. Mm-hmm. And at this point, certainly toys and games are the sector that's most exposed here from a consumer perspective. That is the category that is most sensitive to imports specifically from China. Then you have household appliances, and then it kind of goes from there. Mm-hmm. So those are the types of companies I would expect we would hear the most significant pain from. That said, the China tariff rate is starting to converge with tariff rates from elsewhere. So it is possible that it's less attractive to move from China when there's a cost in terms of doing so. We don't exactly know where tariff rates are going to settle. It is possible at some point fentanyl tariff rates could come down, in which case our tariffs on China might actually be roughly equal to where it is from the rest of the world. So at this point, I think what we'll see is companies are going to kind of just continue to do business, which is probably why China's seeing less of an impact than perhaps could otherwise have been the case.
Right. Well, it's also interesting to me, ahead of this, there were reports that the U.S. had offered to pause export controls, and maybe to grease the wheels and get things going. And presumably that's something that China wants to hear.
Oh, absolutely. I mean, look, right now, the U.S. position is that we need to concede on export controls. We need to be willing to concede on potentially fentanyl tariffs, do whatever it takes to get that meeting between President Trump and President Xi, because that's what President Donald Trump wants right now.
I am curious, though, the other negotiations and agreements that we have seen still leave a lot of room for ambiguity, don't they, right? Even the EU, the other day we were discussing this morning, are the pharma tariffs, when they come, are they going to be applicable to the EU? The EU seemed to indicate they're not, but it's sort of confusing. In your experience, do you think that China will abide that kind of ambiguity in its agreement?
So look, I mean, they already did that in phase one, right? They made all these commitments to buy so many U.S. exports, and they fell, short, well short of that. So if ultimately the president decides that he wants to do a phase two with the Chinese, they'd be more than happy to eventually settle on numbers, because they know that all they have to do is run out the clock, and they don't really have to live up to any of that, which would of course be a huge disaster. But it seems like that's potentially where we're headed.
Stephanie, you talked about earlier that you had come up with different scenarios for the tariffs and their effect on the U.S. economy, and it's actually worse than you anticipated. What would, specifically with regard to China, what would be a worst case scenario, realistic worst case scenario for the U.S. economy?
Yeah, so the broad set of tariffs has come in worse than our even worst case scenario over the past couple of weeks. We've been keeping China kind of steady because it seems like Trump wants to do a deal with China. So our very much base case across all of the scenarios, or at least on the base case and then the worst case scenarios, that tariffs stay at 30%. So I think the way to think about it is your 30% is probably your ceiling, and then something that's closer to 10% is your floor, and we're likely to end up somewhere in between. So could it go higher? Of course. I think Trump realized that, one, that could mean empty shelves. I think that was a big surprise. Mm-hmm. And the inflationary impacts of that, I think, has finally gotten through, that we might actually see an impact if they go notably higher than 30%, because you have to add on the tariffs from the last trade war. So now we're talking about tariffs that are close to 50%.
And not to mention the sectoral tariffs, for example, on some specific things as well. Shahzad, to go back to the economic question in China, how do you characterize the Chinese economy at this point, and especially that resilience that you pointed out in the face of these tariffs?
Well, there's a lot of stability that we've seen in the numbers so far. Now, we're going to get our latest readout in a couple of days for July. But you've seen a combination of the economies roughly doing fine, but also that Beijing is stepping up its stimulus measures. So they've kept interest rates at historic lows based on our tracking, and you're getting much more fiscal activity this year than you've had in years past. So I think they're trying to manage the situation. If they can keep the economy humming along, I think they'll be happy with that, and where needed, they're going to provide a stimulus without needing to go, totally bonkers on this and announce some kind of, big, record-breaking numbers of spending.